evening, and welcome to another Invest in GH webinar. I'm your host, Prince Henry Danquah. I'd like to thank you for joining us this evening. For those of you who don't know us, Invest in GH is the leading provider of financial news and education in Ghana. Over the years, our news, magazines, and more recently, our webinars have been delivered to thousands of people in Ghana and beyond. And we'd like to thank you all for supporting our brand throughout this quarantine period and even this new year. Our webinar today is proudly sponsored by Yellow Card. Yellow Card is an Africa-focused cryptocurrency and gift card platform where you can buy, sell, and then store your cryptocurrencies. So you can visit Yellow Card on their websites at www.yellowcard.io. We've had webinars in the past that have covered topics on investments in mutual funds, stocks, real estate, and cryptocurrencies. And all our previous webinars are available for streaming on our YouTube channel, Invest in GH. This webinar is also streaming live on our YouTube channel, Invest in GH. So if you're unable to join us here, or you know someone who is unable to log in via Zoom, then kindly send the YouTube link, which has been made available in the chat section, to that person so that they can also join the discussion. Today, we will discuss the future of global decentralized finance and opportunities in Africa. The future of global decentralized finance and opportunities in Africa. And to take us through this discussion, we have two experienced speakers, one of whom is coming for the second time. The first person is Mr. Solomon Anzagra, and then we also have Ebenezer Ghanney. I would introduce Mr. Solomon first, and then as for Eben, he's been here before. So, Mr. Solomon Anzagra is an international consultant based in Geneva, Switzerland. He has deep knowledge and experience in blockchain technology, digital assets, and cryptocurrencies. He has offered trainings and spoken at various seminars and institutions within and outside Ghana, some of whom include the United Nations, the Economic and Organized Crime Office in Ghana, and the Ghana Bankers Association. He holds a master's degree in international development from Graduate Institute of International and Development Studies in Geneva, Switzerland, a bachelor's degree in development planning from KNUST, and has completed a securities course at the Ghana Stock Exchange. Our second speaker, Ebenezer Ghanney, he is passionate about technology, finance, crypto, and investing in stocks. He's the head of operations for Yellow Card Ghana, our sponsor today. And prior to starting his role with Yellow Card, he was the financial and administrative analyst with Liquid Financial Services. Eben holds a BSc in accounting degree from the University of Professional Studies and an authorized dealing license from the Ghana Stock Exchange. We'll begin our webinar today with a presentation from our speakers. Solomon will start, and then we'll have a few words from Eben, after which we would interact with the speakers via the Q&A session. Please, whilst you are here, if you have any questions for our speakers, don't hesitate. Kindly post them in the chat section here, or if you are streaming on YouTube, just type it under the comment section and we will address it. If you also have our contacts, you can always send us a WhatsApp message, and then we'll collate all the questions and then ask them appropriately. During the webinar, we'll open the forum so that those who raise their hands can get to ask the speakers questions, but that will be for a few people. So if you have questions, just send them through the chat section here. And share the link if you have it to your friends so that they can join the discussion as well. Thank you all for joining us once again. And Solomon, can you hear me?
Yes, Prince. Can you hear me?
Okay. Thank you for joining us today, Solomon.
Thank you.
All right, I can hear you clearly and I can see your video too. Yeah. So I'll just leave you to it.
Okay.
Yeah. When you are done, then we'll have Eben. Eben, can you also hear me?
Yes, I can.
Okay, great. All right. So
Can
I'll
you
leave
see
you
my
to it.
screen, Prince? Can you see my screen?
Yes, I can.
Good. Just a sec. You can still see it?
Yes, it's clear enough.
I need to arrange the screen a little bit. Just a second.
Kindly disable the annotation
Right.
whilst you share your screen. Thank you. Great.
I'm not sure why it goes out of presentation mode when I go to the next slide.
I think
you
you're on the
see?
last slide, so you have to go back to the first slide.
Ah, very well. That's true. Very well. Right. Okay. So welcome everyone. My name is Solomon Anzagra. As Prince has said, I have worked with on this topic for some time now. For the past 5 or 6 years, I think the major questions I've actually encountered in working on this area has always been people who are interested but not sure where to start. So today, my knowledge will be shared with you, but I think we have a wide range of audience. Some of you may be may be here for the first time, and some of you may actually have some deeper knowledge. So if you are actually hearing about this topic for the first time, don't worry. We will help you to ask the right questions. I think it's always better to have to ask the right questions than to actually have answers to the wrong questions. The topic is pretty technical, but my hope is that I will make it as simple as possible to understand. And as well, because we have Q&A, feel free to ask questions if you actually don't understand anything. So with that, I will dive in. So in a very simple way, I'm going to make the presentation short so that if you have questions, we then go into deeper conversations. So I will take some time to introduce you to concepts that are very common in this area and how to get involved into this sector. And most of you may be interested in investment in the sector. So I will also try to cover some things to take note of when you actually putting your hard-earned cash into this. And of course, I will talk about some of the opportunities and risks, both in the sector globally, but also, of course, in Africa. So a few concepts here. I think, sorry, I'm still struggling to deal with the video. Normally, you will hear about blockchain technology or distributed ledger technology. They are used generally interchangeably. They actually almost mean the same, but there are some nuances. Blockchain technology is generally a networked set of computers running on a single code that hold a common truth or an accounting principle at the core of it. And you will hear of cryptocurrencies. Cryptocurrencies right now are generally private kind of currencies that are used as a tokenized way of accounting value within the blockchain. And decentralized finance is an umbrella term to mean finance that are actually financial systems that are running on the blockchain. And remember, the blockchain is actually connected computers, so it's decentralized. And smart contracts are mostly self-executing code that actually operate with very simple principles of being instructed to act in a particular way at a particular time, possibly, and then they do exactly that. You also hear, if you're likely to go into this as a profession or whatever, you will hear about liquidity provision or liquidity mining. Generally, it simply means you're actually staking, you are committing some value or some resources or some tokens in a way that allow for market making whilst you make returns on that. Of course, this normally comes with a common risk called impermanent loss, which is a kind of loss that is pretty temporary. And of course, you hear many other jargons like NFTs, NFTs, SAFU, HODL. NFTs are generally non-fungible tokens, which are usually used for special non-exchangeable protocol tokens that you actually cannot exchange one for the other exactly. And NFTs are, again, non-fungible top-level domain names. As you may be aware of domain names in the internet, these are a way of actually decentralizing the domain name system. And SAFU normally stands for safe, or HODL, which stands for hold, but with some kind of twist to the name. Now, if you're going into DeFi, what I think you will need for the start is that you need to understand some history, you need to understand money, and you need to understand the technology. You don't need to know everything, but you need to understand how it works. You need to understand the value proposition of cryptos in general. And if you have some computer science or programming knowledge, it's useful. It may not be necessary, but it's useful. And most importantly, you should keep an open mind, because this sector is very new and it's challenging most of the things we have known and accepted, like authority, like centralized money. And I think that's the hardest part. Now I'm going to take you through what I mean by understanding these things, because once you understand them, I think you're ready to make the right choices in the sector. It also allows you to ask the right questions. Now, let's begin with the idea of understanding history. I think it's important to remember that just in 1992, the internet was actually nowhere near what it is today. And if you look at the graph on the below the right hand side, you will see that the internet had grown exponentially from 1992 to somehow 2014, that literally multiplied in user base. If you look at the history of cryptocurrencies, Bitcoin emerged from nowhere in 2009, and it was alone until 2015 when the next second biggest cryptocurrency today, which is Ethereum, showed up. But Ethereum brought an improvement in a way to the network of Bitcoin, but with a whole new level of programmability that allowed for smart contracts, and especially what we normally call the initial coin offerings that took off in 2017 and ballooned funding across the sector. Now in 2020, you will see, if you look into the sector, you see a whole lot of things like staking, like lending, like borrowing. Today you can borrow and lend, you can earn. And most importantly, there are now so many blockchains that the argument is heading towards something like, how can we make them interoperate and work together? Now from 2021 going, we cannot tell exactly how everything will turn out, but you can see that the industry is growing really fast, both in value. Let's remember in 2016, the Bitcoin market was less than $100 million. Today, the Bitcoin market had crossed $1 trillion. That's not small growth, that's exponential growth and multiplication. Now, the next thing I ask you to understand is that you should understand what money truly is. Most of us have come to accept money by what it is, and we don't actually ask carefully what it truly is. In your mind, you may ask, is money the cash that you're holding in your hand, or is it the Momo balance, the mobile money balance in your mobile wallet? Is it the ATM balance? Well, the truth is that all of them is money. Some of the money you don't see, but you spend. For example, your mobile money balance, you can send to somebody, you can say pay for a trip. And the most important thing is that all of them is money, but they share one thing, the unit of account, which is based on truth, on trust, on consensus, and on authority. Truth is that when I send you 1 Ghana cedis or $1, based on, let's say, on my mobile money balance, or if it is sent through my bank, or if the cash I give to you, you don't question, you take. it is already at a very sublime level. We believe that this is true. What I'm giving you is true money, and that I have it through genuine means, and that we agree there's a consensus that it is actually money, and that there's some kind of authority behind handling the ledger, the accounting process. Now, this authority and consensus is something you should pay attention to, because we will come back to it going forward. But let's look at what a blockchain is. You also need to understand what exactly it is. Now, I said that a blockchain is simply a network of computers holding a code and accounting on a single truth. If you look at blockchain, simply, it doesn't say in God we trust, or it doesn't say in money we trust, it says in code we trust. The code is simply independent, and the people who are actually joined to it can agree on the truth without actually knowing each other. So the people can be strangers, they can be random, but they agree that it is true. Now, if you look at the blockchain carefully, these are a few features you should pay attention to. It's normally a form of a digital land, or a nation, or an economy, or a community. No one knows the other per se, but there's an exchange of value between them. It mimics very simple, similar laws that happen in our economy with cryptographic code. And there's mostly a currency that serves as a unit of accounting, like Bitcoin. Now, when people talk to you about Bitcoin, you hear the Bitcoin token, and mostly you'll talk about the price, especially when the price is going up. Now, what they don't tell you is that the Bitcoin means more than just the token. Bitcoin in itself is a network of a computer code that is the most secure network on Earth today. And second, most importantly, it is a political system, a governance system where agreements are made without actually people knowing one another. This has never happened before. This is why the whole industry is so sophisticated, people find it difficult to understand, because it doesn't have a leader, it doesn't have an authority, but there is actually truth, and there is trust, and there is agreement or consensus with clear respect for the laws through computer code. Now, that we never had before. And that's why that's one of the reasons why this place is a bit too technical for most people. Now, one more thing I say you should understand is the value proposition of cryptocurrencies or digital assets in general. Digital assets are generally cryptographic code with very economic principles embedded in the code. They allow for human coordination without necessarily knowing one another. These networks are normally made of strangers that can actually use the standard unit of accounting without actually knowing one another. They are distributed truth-holding computer codes. What it means is that it's peer-to-peer, as in if I want to send you $10 from Switzerland here, I can send it to you without using a bank, without using any central authority. So peer-to-peer simply means from one person to another without using a middle person. And this is very novel. It's never happened before. And so we are having this, and that's why most of the time people find it difficult to understand. Now, the tokens that happen to be at the center of blockchains, which is normally the cryptocurrency, they serve as money most of the time. But they also serve as many other things. They can measure standard, they can, like today, you might hear of NFTs, non-fungible tokens. These are like rare artifacts or rare art that are actually embedded in the blockchain, that some of them are being paid for at very exorbitant prices. You can have tokens that have been sold, NFTs that have been sold recently. You can have one that sold for more than $50,000. Now, there are many areas of use for blockchains. For example, most of them today are used in tokenization, but we have clear business opportunities for many other things like tax advisory, brokerage, even development of applications on top of the blockchain, which is becoming a big deal, and business controls in general. Now, let's look at investing, because most of us here, I think, generally have some interest in what it means to be a part of this sector. I think if you want to invest in this sector, in the beginning, you have to remember that you have to do some research. You cannot go on the street and ask anybody, what should I buy? What is going up? I think it's always the wrong place to begin. You need to research. and research a lot. This is the big part. And once you have researched, you make a decision on what are your investment objectives, what's your investment horizon, and then what are your investment key indicative measures you want to take. And then you choose your portfolio of assets based on that. Now, once you get that, you also need to know that during the research process, you should know that there at some point you may need to actually custody the assets, because this is self-custody assets. Remember, it's peer-to-peer, so you have to hold your assets. You don't necessarily give it to someone. Of course, there are a number of custody services, but I think that it's normally good to be self-custodied. And then you also need to know that at some point you want to actually sell these assets, or you want to use it on the ecosystem. So you have to know all this before you start. Now, just a little bit on things you should know when you're investing in DeFi, decentralized finance in general. You should know that we have had some progress across time, and that Bitcoin has been very, its value proposition is purely security. That's number one. And that is a very application-specific computer. When it comes to second and third generation blockchains, they adopt most of the time the previous blockchains, but with some correction to their limitations, because as you may hear every day, somebody says, Bitcoin uses more energy than most countries today. It actually is slower than most blockchains today. And so you will see that more and more blockchains are showing up with improved cryptographic primitives, as well as very useful speed and safety, as well as security. So some of the recent, or you can call it third generation and second generation blockchains, are Ethereum, Algorand, Nevos, Cosmos, and Polkadot. Now they are bringing interesting value additions to the table. Beyond just having a single chain, a number of them are driving smart contracts, which is a very useful tool. Some are driving interoperability between different blockchains. Now, practical steps to investing. What I say is that first you need to find a broker, somebody who is willing to take your cash and then give you the crypto equivalence of it. So you give them your cash and then they give you the crypto equivalence. Now, when they give you the crypto equivalence, you don't just take it and go away. It's important to independently go on the blockchain and verify your cryptos that you truly own what they have sent to you. And then you begin to think about where do you store these cryptos for the long term. I think that it's always best to use cold storage. Now, when it comes to storing your cryptos, there are two major ways. One is what we call cold storage, and one is what we call warm storage or hot storage. Cold storage is when you use a hardware wallet or very basic, primitive approach like paper and metal to keep the code, the private key. Or warm or hot storage is when you use internet-based wallet, like on your mobile phone or your computer. They are not necessarily safe. Anytime your code is touching the internet, you have a high risk of losing it in one way or another. Somebody can steal it because some people are really smart. Now, most people have actually come to cryptos and they normally go straight to trading. I don't advise this. The reason is that if you are not a professional trader, the chances of you losing money in cryptos, trading it on a daily basis is very high. Because the market most of the time is either illiquid or very volatile. So again, next thing, don't leave your cryptos on exchange. I know people personally who have lost millions of dollars because some exchanges collapse with their cryptos. So you want to keep your cryptos to yourself. And again, do not go in and buy anything that you don't understand. It's easy to just take, oh, something is going to 100x and you buy it. My advice is that remember to always try to understand the fundamentals of the blockchain or the cryptocurrency before you buy it. Don't buy it because they say it's going up. Now, these are very basic principles in the crypto space. You will hear things like not your keys, not your cryptos, or don't trust, verify. The reason why they say this is because in cryptos, self-custody is primary. In fact, it's so important. So you can always make money in crypto. But can you lose money in crypto? Almost certainly. So trading cryptos, as I said, is not necessarily for everyone if you're not a professional trader. And always remember to verify the crypto that are sent to you by your custodian on the blockchain independently without asking them whether it is. I remember in 2016, I created a number of Bitcoins on another blockchain, and I sent them to friends, a number of people who I was just taking through this course, and I said, take it and try to use it and see how it works. This is Bitcoin. It is called Bitcoin, actually. Sorry, it's called Bitcoin. And I said, it is Bitcoin, but on another blockchain. So what you need to understand is that if somebody says they're going to sell you Bitcoin, doesn't mean that the Bitcoin they're sending you is actually on the Bitcoin blockchain. So you have to go on the Bitcoin blockchain and verify yourself to be sure that what they send you is actually Bitcoin. So we have seen a lot of innovation in this space, but there's also a lot of crime in many ways. So when you're interacting with smart contracts, this is something that I think you will, if you're going to this space as an African or a Ghanaian, likely you will not have the money to be able to mine cryptocurrencies with machines. So likely you will do liquidity mining, and liquidity mining normally requires that you interact with smart contracts. When you're interacting with smart contracts, you will most likely involve with staking your coins or borrowing or earning something. Now, this process of actually staking is very important. Remember that when you actually interact with the smart contract, you have this nuanced risk of impermanent losses, which is a temporary way of losing your currency because of the market movement. Only interact with audited smart contracts or audited smart contract in ecosystems. For example, in last year, I share with you two examples. A young guy designed a code, and then he said, this code is not yet audited, so deal with it with caution. The code was, the ecosystem was called YAM, just like our yams in Ghana. And within 24 hours, over half a billion was actually locked into this smart contract. Then, and I was just talking with friends and said, I think these people are becoming a little bit unreasonable in this space. Then after one day, a bug was discovered in the smart contract. And the smart contract was literally, we saw that the smart contract was giving too much power to control the money. Now, the founder gave a warning that everybody should leave the smart contracts. They tried to overtake the smart contract. The smart contract was given too much power. It overtook the money and took hold of the ecosystem. So people had to jump out. By the time they jump out, most people had lost money. Now, it's very common to have these kind of things. And if you go into the smart contract space, you'll see a lot of this. Most of the solid staking environments today or liquidity mining environments today is like Uniswap or SushiSwap. I think those of you who may understand SushiSwap, just last year it came up, and the story is also the same. It was an unknown guy who actually deployed the SushiSwap, which was more or less taking Uniswap and forking it and then creating a new ecosystem. And then when people put in money for the development, the person took $30 million and disappeared. And the community went berserk. And then I think about 2 weeks later, he showed up with the money and said he was sorry, but he had already caused a lot of harm because people had already lost money. Now, there is a common thing in cryptos, especially in decentralized finance, called degenerate lifestyle or degen lifestyle. It's a thing where people just go in and start to interact with smart contracts anyway, just trying to make front run and make some money. And you might have heard of YOLO. You only live once. This is a common concept there too, because people just move. You put a lot of money at once. If the smart contract is not good, or if there's a bug in the smart contract, you lose all your money. So don't YOLO, and don't be a degen. Now, there are many risks and opportunities that come with this industry. I think that the risks are many because the sector is very sophisticated, but the opportunities are even more. For example, I think that once this industry has matured, it will require new kinds of people with different skills. We will still need tax experts because people will make money and they'll need to declare their taxes. We will still need accountants in this space. We will need auditors. We will need custodians. We need asset managers. We need educators, traders, marketers, community managers, and even nonprofit, as in NGO work. I think one of the fastest growing areas is actually NGO work. I don't know if you have heard of Good Dollar. but this is one of the commoners in the universal basic income area. It's a very basic web portal. You have a smartphone, you connect to it. Every day they send you some dollars for free. So it's a universal basic income space. And there are a number of projects that are trying to do this, that are trying to just create universal basic income on the blockchain. You just join with your phone, and then they send you money every day. You have to claim it though. If you don't claim it, then you lose it. Of course, because this place, the innovation is so fast, it's at a breakneck speed, there is a whole lot of criminals who are always running ahead. So the most crime is also going on here, and you have to be aware of that. The scams are numerous. Job losses, of course, could be inevitable going forward when the way we transact and exchange value changes. People who do some work may lose what they have been doing. And of course, money will change, and that will change many lives with it. I think that one of the interesting things about money is that today, even if you are using mobile money, you already see that money is changing very fast. What's shocking is that money will change even more. Money is becoming more digital. I will be surprised in 10 years if we still have cash and coins around. But that's my take. Now, putting it all together, I think that it's very early stage in the industry today. We still have a long way to go. The innovation is at breakneck speed, as I said. And so you have to be aware that one of the greatest wealth creation processes taking place right now in our lifetime, but there is risk. I still remember in 2016 when anybody who cared to listen, I will tell them just buy one Bitcoin and keep it. At that time, Bitcoin was less than $500. And some people thought I was mad, honestly. Some people thought that I was getting crazy. And when Bitcoin went to 58,000 just, I think, last week, then all those people who were asked to buy Bitcoin started calling me. Now that's the risk. Because you will hear it only when things have gone a little bit out of hand. Now, in this space, I must admit, knowledge is king. You need to know what you're doing. Even if you don't know, try to learn something before you put your hard-earned cash into anything. And anyone who find their place, anyone will find their place in this industry because the place is huge. It's like the internet. It will create all kinds of opportunities for everyone if you want to participate in it. So it doesn't mean that some people, if you have a computer science or cryptographic knowledge, or you are a finance person, or you are an NGO person, you have a place and somebody doesn't have a place. This is big. I think when it finally arrives, it will be enough for everyone. But you have to be aware of it. You have to have some knowledge in it to be able to take advantage of it. With this, I think, thank you. I'm done, but feel free to ask any questions. I think Eben may have something to say. Eben?
Thank you very much, Solomon. Eben, yeah.
Yeah, thank you very much for this presentation. I believe he has touched on high-level stuff, and there will be a lot of questions. I believe when people ask questions, we will try and give more examples as to how you can go about figuring out what to do in this space and all that. But just want to share my screen quick one and show people some of the things he has discussed in its practicality, how things work. So the first thing I'll be showing is like, I did an event with Invest in Ghana December 19th, and we talked about Bitcoin. I went through the use cases for it and all that. I just want to refresh people's mind on that and also show an example of the price of Bitcoin as the day I was talking about it and the current price of it and the tips I give people about how to go around it and all that. So I'm just going to share my screen so that people will see. Sorry, I'm just running.
Okay, whilst Eben sorts himself out, I'd like to say that This webinar is streaming live on our YouTube channel. So if you know someone who is unable to join us here, you can send the YouTube live link to the person. You can find a link in the chat section here. Just check the chat section and then you see the link and then you can send it to the person. Also, when you watch our videos on YouTube, kindly like the videos for us and then subscribe to our channel so that we can get more people to also watch our webinars. Thank you very much. Eben?
Yeah. I hope everyone can see my screen now.
Yes, I can.
Yeah, so as I think December 19th, we are talking about Bitcoins. The price of the Bitcoin was around 19,000 that day. Currently, if you check the market, it's around 46,000. And there's possibilities it can go up, it can come down. I remember the advice I give people is when you're coming into the space, you are new into the space, you should just focus on Bitcoin because it's the first currency and it's the most stable one. And as a newbie, just focus on it. Okay, what amount of my earnings or my income can I invest here that it won't be a problem if it's supposed to go down 20% in a day or go down 15% in a month's time. So basically, if you go with that concept and you invest little by little into the Bitcoin, you buy on a regular basis and forget about the price you are buying it and you're holding it for the long term. Then the long term, you know that it's going to go up as adoption goes up because Bitcoin has a finite supply and the demand for it keeps on increasing year on year. So as you can see here, it says that circulating supply right now is at 18.6 million. So that's the only number of Bitcoins currently people can have access to. But the demand for it is going to go up. So the moment it goes up, the price of Bitcoin is going up with that. So it's basically demand and supply here. Our speaker Solomon talked about cold wallets. So I just wanted to show examples of how cold wallets look like. So basically we have this device which looks like a pen drive here. It's an example of a cold wallet. And he also mentioned that it can be paper-based. So that's what is on the right. So you can basically go to, I think, bitcoin.com and print a paper wallet if you want to keep your Bitcoin stored on a paper wallet. Then we have what we call hot wallet, which is Yellow Card provide a hot wallet, but we also provide services that you can buy and sell your Bitcoins to us. So if you want to buy Bitcoins, you can easily sign up on our platform, easily buy it and transfer it to any platform you want to store on. So you can buy from us and transfer it to a platform that you want to store. So if you want to store it on a cold wallet, you buy from us and just transfer it to that wallet to store it. Yeah, so that's the basic thing I just wanted to add to his presentation. We'll take questions, and if there's any details people want from us, they should ask and do that.
Okay, thank you very much, Eben and Solomon, for the wonderful presentation. And we have a couple of questions here. Let me take the very first one. So the first one is saying that I understand finance a lot, how money works and all, but I have listened to lots of people discuss cryptocurrencies and blockchain, and I still am unable to understand it. Can you help? And why is it so that we find it very difficult to understand blockchain and cryptocurrencies? All we know is the price. The price is going up. The price is coming down.
So right. Do you want to answer that?
So that's a very interesting question. I said that the hardest part to understanding crypto is open mind. Huh? The reason why I said that is because I struggled a lot. I discovered the Bitcoin in 2013. I only bought Bitcoin in 2016. Now, this is very hard because you have to, all that you know, you may want to put aside and actually begin fresh. For example, yes, you may be a finance expert, but cryptos are not finance alone. Crypto is a blend of three things. It's a blend of politics or governance, computer science, and finance. Now, you may understand finance, but you don't understand governance. You may understand governance, but you don't understand computer science. You may understand computer science, but you don't understand finance. Now, once you blend all this, and this is why it is also very difficult for most people to understand. First and foremost, finance as we know it does not exist without intermediary. There is no finance. The current financial system is actually built purely on intermediation. Without intermediation, the finance system will not work. Now you have a completely new system that does not use intermediation. How would you handle this? Because if, for example, we are all used to banks, what the banks do is exactly what happens on the blockchain. This time around, with nobody sitting down behind the keyboard and entering anything, because the code is handling everything. That's very important. The second thing is that, of course, most of us have come to accept two things that I think are very interesting. One, that money, as we know it today, has always been here. Surprisingly, money as we know it is actually just 50 years ago, 50 years old. Money as we know it started in 1971. Before 1971, money was a proxy to gold. In 1971, you may remember that Richard Nixon linked gold from money. So money became absolutely in itself by value from 1971. That's just 50 years ago. So money as we know it is very young. It's a very young innovation. But of course, most of us have come to meet it, so it becomes normal. Now, governance is the same. We are so used to centralized authority. For example, if you have a system that is working without centralized authority, most of us would struggle to understand it. I think these are the two things you have to begin to question at the beginning of your learning process in this.
Okay. I'd like to add to what Solomon just said. So I always make this analogy for people to understand this space. Think about the first time you heard of mobile money. What was running to your mind? I believe you are trying to even figure out how is it possible that my money is sitting on a digital wallet or sitting on my phone and all that. Because when you talk to usually the elderly people those days, it's like, I'm not doing anything mobile money. We still have some people in this space currently still are not comfortable with mobile money, but you might have been comfortable, and ask yourself, what drove you to become comfortable about mobile money? These same things that are blocking people from understanding what is Bitcoin, because it's different, because you are not used to it, but you have people, the technology is new, and you have companies building softwares that will make it more easier for people to be able to use it. So we had mobile money interoperability, we had a lot of services being opened up so that people could easily get access to it. Mobile money was able to use people like agents who are in your community. You could walk up to the person and say, okay, give me my money from the online system that you are using. Just give me my cash. You could easily access your cash from that point. So these are the things that people are working on to make sure that Bitcoin or the blockchain technology becomes easier for people to understand and also to interact with.
Okay, thank you very much, Eben and Solomon, for your response. There's another question. This is to Eben. Is there a platform on WhatsApp or Telegram or social media to guide someone who wants to use the hot wallet service?
Yes, so there's a Telegram. So YellowCard runs a Telegram page. I'll try and see if I can get a link and drop it in the chat as you go on.
Okay, thank you very much. Okay, Solomon, there's one for you. Someone is asking, what actually drives DeFi? Okay, what actually drives DeFi tokens up? Is it just utility or demand and supply?
It's many things. Innovation is, I think, the biggest part. DeFi, as we know it, like Eben said, there will only be 21 million Bitcoins. Today, already 18.6 are already gone, right? 18.6 million are already gone, which means that now you have about, I know about 5 publicly traded companies that own Bitcoins that have now bought Bitcoins into their public, their balance sheet as a company. All the way till this year or early last year, only individuals were owning cryptos. I didn't know of any company that owns some. Now companies like Tesla, Square, MicroStrategy, name them, they are all buying these cryptos up on their balance sheet. Now the same Bitcoin is what they're buying, whose supply is capped to 21 million. Now when the supply is finished, where can we find Bitcoin? Now this is a very important supply-demand dynamic. Of course, beyond that, we have a number of cryptos whose prices are going up because innovation is there. For example, I use an example like Handshake. Handshake is another crypto that allows you to actually, that's literally built on the top level domain zone, or it's a top level domain zone in itself. That allows you to buy the crypto and then use the crypto to bid for top level domain names. Now, that when you buy a domain name, what happens is that it takes this supply, this crypto you have used to buy it, and ban it on the blockchain. Now, once you are taking supply out of the market by banning it whilst you're using it to buy domain names, what happens is that it literally drops the supply while the demand keeps going because people will keep trying to buy domain names. And so you have these kind of dynamics that are coming in. And I think that the biggest driver is actually innovation. Because we've never seen this kind of innovation before.
Okay, thank you very much, Solomon. I have a hand raised here, Maxwell, Marty. Maxwell, can you hear me? Maxwell. Okay, I think Maxwell is unavailable. Israel.
Okay, good evening once more. I came in late to do, but I don't know if this question has already been addressed. But I wanted to get to know the difference between the yellow, yellow card and then the blockchain app. What's the difference?
I guess this for you, Eben.
Israel, yeah, I'm going to take this. So the major difference is yellow card allows you, a Ghanaian, to be able to buy and sell your Bitcoins to us. So we act as a counterparty where if you need a Bitcoin today, you can go on yellow card and buy from us and store with us. Currently on the blockchain app or the blockchain service, you can only store your crypto on there. You can't buy or you can't sell on there. You just have to send there and use as a hot storage, what Solomon talked about. So they are offering just the storage aspect, but we are offering buy, sell, and store as well on our platform.
Just to explain something a little, I think this person is confusing the blockchain with an exchange. An exchange is a liquidity provider. The blockchain is a network where you hold the tokens as the truth, the place where you have this value, these tokens or cryptos actually certain that you can use anytime. But the exchange is a liquidity provider between you and the blockchain most of the time.
Exactly.
Okay, thank you very much, Solomon. Another question here. I'm not really getting the names of those who are asking the questions. Okay, this one is from Augustine. He's saying that we realize the price of cryptocurrencies gets influenced by, tweets and words from very influential people. Is this going to be some sort of hindrance for the progress of cryptocurrencies or the crypto industry? Are they going to be banned because of these things? It seems these people are manipulating the prices.
Let me take this. First and foremost, nobody can ban blockchain. That's very important. You can ban people from being able to buy a cryptocurrency, but you cannot ban the blockchain. If they could ban Bitcoin, it would have been long gone by now. I can assure you, many people tried. Governments tried, they could not. The reason why it is like this is because it's a hydra-headed, what you can call beast. It's many computers connected together, people who don't even know each other, one another. So nobody can stop the blockchain. Now, the problem with idea of important people tweeting about this is a regulatory issue. I don't know what governments are going to do about it, but that's exactly why I think you have to take your time to understand what's going on, because you have to drown out the noise from the value. There are a lot of memes, a lot, and people are just selling snake oil everywhere because they know people don't understand this. And so you have to really, really, really take this very serious, because the likelihood of you being scammed, I can assure you, is more than 50%.
Yeah. To add to what Solomon just said, again, so I get a lot of people come to me, ask, I've heard of Dogecoin. Should I buy? Should I do this with it or not? That? And I always explain that. Why are you going to buy it? What's the use case for Dogecoin aside you holding it and hoping it to go up? When you think about Bitcoin, there are 4 major use cases for Bitcoin. You can use it as a store of value because you predict it's going to go up. You can use this for remittance sake that, okay, I need to send money to someone in Nigeria, I need to send money to someone in UK. You can send it via the Bitcoin network. You can also use it as a hedge for your assets, and you can use it to do normal trading, like buying and selling of stuff. Now, when you are going to invest in Dogecoin you have to learn the history of it. I believe Solomon did well by explaining the history of Bitcoin. Now, what's the history of Dogecoin or any other memes out there? They are just created for meme sake. Everyone can go to a blockchain. Solomon mentioned he went there, created his own chain of Bitcoin. You can go there and create a whole new blockchain or Bitcoin and give it a name because it's like a use case you want to use it for something. Like say you have a use case that in my community, to be able to pay someone in my community, you have to use Dogecoin, or the way every country has their own currency. Communities build their own currencies for certain purpose. So you have to understand the purpose the coin was created, not just follow because everyone is jumping on this next meme or this next thing. And for people who are tweeting about Bitcoin and all those things, yes, their tweet will draw attention to it. It will draw people to following and buying Bitcoin because they just heard Elon Musk tweet about it. They just heard some big person tweet about it. But it can't be banned in that sense because it's not a security. It's only securities that they can't. So for example, Elon Musk cannot come and talk about Tesla in some way that Tesla is going to raise money in the next 2 days or something that will move Tesla stock, because in that sense it's regulated by the government. But Bitcoin is not regulated in any form of shape. So they can talk about it how they want it, but it will never be banned.
Okay, thank you very much for your response, Eben. I have a hand raised here, Henry Anderful.
Okay. Thank you. But so I listened to the whole thing from the beginning, and he kept on saying that there's a lot of opportunities on the blockchain technology or with it. How am I going to get the right books or things to read about this blockchain? Because I really want to understand it. That's the first question was. It's hard to understand it. What exactly are there books? Are there media houses, or are there people really explaining this thing for laymen like us that don't know much about this technology?
Did I take that?
No, let me take that. Henry, this is the problem. Problem is that this is so new that there is literally nothing. At the same time, I think because generally the whole space is open source, all the software is open source, just having a little bit knowledge of how to Google the right concept already allows you to learn so much. That's why I started my presentation with the concepts. I think because we are in a very, very early days and in a new territory, it's normal that we don't know where to start. At the same time, the internet is a big sea of opportunities for you to be able to search for all these things. You have to start somewhere slowly and build the knowledge. But I cannot guarantee a book or, well, most of the books that are written are either a historical explanation of what's going to happen or about people who are already doing this. Some books, for example, is the Bitcoin Standard. The Bitcoin Standard is a very popular book right now. Another book is the Bitcoin Billionaires. These are stories about what has happened in the past, but also what is likely to happen in the future. I have read both books, and I think the Bitcoin Billionaires is a very interesting book for anybody who may want to know the story of the early days adopters of Bitcoin and how funny it was from the beginning and how much they were disrespected for actually believing in this thing. I think that these are some of the books I can recommend. Apart from that, I really don't, I don't think we have enough yet. But as we go, you will see a lot coming. And many people are writing books on this, and we will see more. Yeah.
Okay, thank you very much, Solomon. Another question from Vicentia. What is the difference between a cryptocurrency coin and a token?
I think somebody is sharing their screen. Well, a cryptocurrency is a cryptocurrency. That's what we use the word for. It's a very umbrella word for tokens, for coins, for whatever you call them. Now, a token, generally in 2015, from 2015 when Ethereum came, most of the ICOs were tokens on the Ethereum blockchain. A coin normally has an independent blockchain. A token is normally an appendix of a means of exchange of value that sits on another blockchain. For example, Ethereum Ether is a coin, but if you take Uniswap, Uni, which is also a token, it sits on the Ethereum blockchain and it seems to borrow the security of that blockchain. So a cryptocurrency is a broader concept. A coin normally uses an independent blockchain. A token sits on another blockchain, which already has its native coin. I don't know if it makes sense to you.
Okay.
So, Prince, I shared my
Yeah.
screen to show something to someone asking about how to go about it and the questions they have in the space. So, as I mentioned earlier, the easiest way to go about it as a beginner. So, we all started in the space as a beginner. You need to take the first step, and as time goes on, you understand the high level things. But the problem is people want to come in and just want to go straight to the high level stuff, which will take it will take time for you to understand these things. So for example, this is a tweet someone shared. He said, I've never bought a whole Bitcoin, but today he owns 1 point something Bitcoins. And how did they do it? Every Saturday since February 2018, he has been buying $50 worth of Bitcoin. And many people can do, maybe say in cities, you can be buying 100 cedis every month or 100 cedis every Saturday. But if you look at the total amount of money the person has put in, so 50 times, so this is 3 years, 50, we have about 52 Saturdays in a year. So 3 years, that will give us about 156 Saturdays. Multiply that by the amount, this $50, you end up seeing that the person has invested just $7,800 into Bitcoin. But today, one Bitcoin is worth 46,000. So this is the person's kind of investment. So this person is using the strategy of just holding Bitcoin so as an asset for the long term. So he just buys it and holds it. And as a beginner, that's the best way to start. Just buy small portions of Bitcoin on a regular basis and hold it. As you understand the fundamentals of how do I buy Bitcoin, how do I hold it, where do I store it, then it becomes, okay, now what else can I do on top of that? Then it becomes, okay, can I stake my Bitcoin to earn interest on staking, or can I lend my Bitcoin to earn interest on that? And most of these hot wallets these days provide these services to you that, okay, you have this X amount of Bitcoins. I can take that Bitcoins, hold it in custody for you, and pay you interest of, say, 6% per annum. But every month I'll pay you a part of that. So it becomes an extra way of earning from your Bitcoins. So if you've not figured out how to buy Bitcoins, you don't now know how to go about figuring how to stake or store Bitcoins. So the first point is, how do I buy and where do I store? Thank you.
Thank you very much, Eben. We appreciate that a lot. Vicentia is asking that apart from the use of the coin, what else should one look at before buying it? And then Augustine also wants to know, aside Bitcoin and Ethereum, which other two major cryptocurrencies would you recommend?
I will answer Eben first. Normally, I don't recommend any crypto to anyone. That's my basic principles. If you want to know what I believe, the projects I believe in, because there's still a lot of experimentation in this space. There are genuine projects that have failed. If you were here in 2017, you know exactly what happened. About over 90% of the ICOs, the projects that started have failed, disappeared. Some were sincere and genuine, but they just failed because, yeah, it's experimentation. So normally I avoid recommending anything. Of course, feel free to send me an email and ask me very direct questions like this. I can send you what I believe in, which you may want to also do your research on. Secondly, the first question is very, very important. When you're going to buy a cryptocurrency, for example, what do you consider as the basis for buying that particular crypto instead of another? Today, we have hundreds of thousands of cryptos. What will you buy? Now, what I think is that first and foremost, understand very important things. Can you use the crypto except you buying it and selling it at a higher price? Extremely important. For example, I hold cryptos that I know if their value go to zero, I'll still be able to use the crypto for some other services within the blockchain space that I consider useful to myself. So today, if you have Ghana cedis, you have Ghana cedis because you know that, okay, you can use that to get money, to get food or get water, to get something. I think that same principle should not be thrown away in crypto. That's one. Now let's go into some few technical indicators. In my view, when you're going to buy a crypto, don't say it is cheap. Many people lose money on this. This is 0.001. It is the next Bitcoin is going to $100, so I'll make $1 million. That is a clear way of losing money. Don't try that. What do you do? First and foremost, when you see a crypto, think of two things, basic things. One, what is the supply of that crypto? If a crypto has 1 trillion supply and the price is 0.0001, it looks cheap. But that means that 0.001, you are already dreaming for $1 per one when it is 1 trillion in supply. But what is their value? Second question. What value do they have beyond just speculating that the price is going to go up? Secondly, and most importantly, if you think carefully, you may want to say, okay, I want to have a crypto whose ownership is at least a bit distributed. You don't want some guy who has over 80% of the crypto in one wallet, which they can just dump in the market overnight and make $1 million from everyone. That is a bad idea. If you look at Bitcoin today, the concentration level is very low, but we still believe it's a bit concentrated. If you look at other cryptos, you can have few wallets that are owning over 50%. That is bad. Secondly, one thing that is very common in the crypto space is what we call 51% attack. Now, most people don't understand this concept very well. In any crypto, if at any point in time, some people can collude and take over the computer power, the computational power of the network, more than 50% of that network, then they can actually reorganize the blockchain and actually take away some blocks that are valid and include blocks that are actually from nowhere. That's to say the truth that you're relying on that your cryptos will be your own tomorrow is completely destroyed. And I can tell you there are many cryptos that have gone through this process already. And so the chain is not any trustworthy anymore. Once you have a 51% attack, you've had somebody take over the blockchain and reorganize it, what we call reorg. When this happens, you've lost everything because no one can trust the blockchain anymore. And you can go into the internet and Google 51% attack of blockchains. You will see many of them. Bitcoin Cash, Veg, there are many. Most of them, they are still very big markets, but they are complete zero.
Okay, thank you very much for the explanation, Solomon. There's a question from Israel. Israel is saying, given that some sites shut down after gathering investor funds after the ICOs, how can one be sure that where you are buying the coin from is genuine?
Okay, this I already answered in my presentation. I said, if you receive a token or a coin from a broker like a Yellow Card, for example, you actually have the ability to go into the blockchain, independent of Yellow Card's ecosystem, to verify that this is the coin that you asked for. As I said, you can take another blockchain, create 500 million Bitcoins, and they are Bitcoins, but they're on a different blockchain. They don't have the same value as Bitcoin. So what's important is that you have to always remember that when somebody sends you a crypto that you bought from them, you can actually go into the blockchain independent of the person to verify that this is the crypto you want. So what we normally use is the Block Explorer. So if you take any Block Explorer, which is normally a basic web portal, you go in there, you enter your address, the address you use to receive, your public address, of course, not your private address. You enter it into the Block Explorer search engine, click search, you will see that, okay, this is the blockchain, this is the amount I bought, and this is true, I'm holding that. It's very basic.
Yeah, Solomon, so let me just try and demonstrate it for people so that they could understand what you are saying. So basically, if, say you bought Bitcoin from Yellow Card, for example, or you received Bitcoin. So in this case, I'm using an example of received Bitcoin. So you receive this amount from someone. You can easily click on Explore Transaction. That will take you to the Blockchain Explorer for you to see who sent what and where did it come from. So you can see that this wallet here sent money to this wallet. How much was it? You can easily verify that is stated on the blockchain. So basically, this wallet address here is basically your account number in the normal banking system. So this account number sends money to this account number, and this was the amount. So this is what the blockchain kind of does or do. So in the normal banking system, like you will just go to your bank and ask for a bank statement to see this transaction stated in there. But on the blockchain, you can easily go there and go verify. Either you get that explore from the explore page, or you can always copy your address and come and paste it in the search bar to verify that the transaction or the person I'm sending to actually got it and it is verified. So that's what I want to add to that.
Okay, thank you very much, Eben, for the demonstration there. Solomon, a question from Christopher. He wants you to give him a bit more info on NFTs.
NFTs, okay. If you are a very rich person, you may most likely have heard of precious assets. The commonest is precious wine, gold, precious art, and yacht, and perhaps real estate. Let's use these ones as example. Most people own these things as a way of storing their income. So NFTs are simply non-fungible tokens. When you say non-fungibility of a currency is simply because it simply means when you take $1 or 1 Ghana cedis, you can exchange for another 1 Ghana cedis coin or note without losing any value. That somebody will be willing to take 1 Ghana cedi note from you when you give them 1 Ghana cedis, another 1 Ghana cedi note. That's the whole idea of fungibility. Now, non-fungible tokens, which are normally called NFTs, simply means that when I have it, you cannot exchange another thing the exact same with it. So it's a special way of actually having an asset. Now, when you take the NFT, of course, one thing I want you to understand is that today it is becoming the commonest, again, like ICOs, it's become one of the biggest things today. But there's one problem with this, or maybe two. One is that there is a huge discretionary. A few days ago, somebody sold an NFT for $59,000. Sorry, it was a big news, and the person just sold some, quick picture. What I call, I don't know how to value these things, but that's exactly the problem. Discretion is a big part. You choose what is valuable to you. Secondly, there is a problem of liquidity. Fungibility brings naturally liquidity, that you take 1 Ghana cedi, you can exchange for another 1 Ghana cedi. So you have the probability that if you want to sell it, liquidity simply means the ability to sell something without losing a lot or without discounting it. So if you take an NFT, at some point, if somebody doesn't value it, or nobody values it the way you do, then it's likely you have to sell at a discount, so you lose money. If you're lucky and somebody values it more, they might buy it at a higher price. And I think so NFTs, they are good. Non-fungible tokens are good, but I think you have to bear in mind this risk. They are there. Now, one more thing is NFTs, that's non-fungible top-level domains. I like this because I respect the internet's reconstruction. Currently, the internet is all rent-based. You don't own practically anything. Non-fungible top-level domain names allow you to actually own your internet presence or profile or whatever. Now, this is a big deal in my mind, but most people don't know that. So NFTs is taking a front run, but I think if you think of NFTs, you may have some value there. So I recommend the questioner to look at this a little bit.
Okay. Hello, Solomon.
Prince?
Okay, I wanted to make sure we haven't lost you there.
Sure.
Another question. Okay, yeah, Eben, go on.
Yeah, so I think during the presentation, he mentioned smart contract, he mentioned market making. I want him to explain this concept so that people can understand what is smart contract and what is market making.
I will explain the smart contract first. Smart contract is simply an autonomous code that you deploy with basic rules and principles for it to act in a particular way. For example, I say, I am an employee of Yellow Card. For example, as an example, I'm not an employee of Yellow Card, just an example. Or because, let's use Eben as an example. Eben is an employee of Yellow Card. Eben is paid 500 Ghana cedis every month when the time comes for Eben to be paid, instead of we having a payroll and somebody to pay Eben, we say, okay, we program this. Every month, the code deploys, it sends 500 Ghana cedis to Eben's wallet without anybody doing anything. So every month, Eben actually receives 500 Ghana cedis, and the process goes on. This is what I meant by saying that job losses are real, because there are people who are payroll keepers, who are secretaries and all that. In the future, I think if smart contracts take off, some of these jobs will literally be automated away very quickly. So, for example, common example with smart contracts is the idea of weather. The very common use is an insurance company right now, which is making sure that, when you buy a flight, you actually take an insurance mostly. Now, when you miss your flight, the insurance company refund you your flight cost. Now, there are smart contract in space that actually connect to the feeds, the data of flight. The smart contract is able to detect that the flight has been canceled or is been missed. It's able to decide that once the flight is missed, it automatically pays you your flight before the insurance company even considers anything. Now, this is very interesting because this job is somebody's job, clearly. Now, when it comes to market making, I will use automatic market making perhaps to explain it, but market making in general is simply creating a space for people to exchange value. For example, if you go to the market today, you buy Kobe, you give money, the person gives you Kobe. Now, automatic market making, which is what we call AMM, is normally a code again, which is mostly a smart contract that allows you to exchange value for you to actually go to the market. Nobody takes the Kobe to give you. Once you give your money, the Kobe gives you, the code gives you Kobe. Now, in there is something called liquidity mining or liquidity provision. When you take an example ecosystem like Uniswap, it's a decentralized exchange, which means there is nobody, authority, no leader, no owner. It's an independent code running on itself. So when you go in there as an automatic market maker, you go in there and put the two pairs that people will likely exchange. So if I know that you're going to buy Bitcoin there, I'll go and provide Bitcoin and dollar market there together. When you come, you give your dollar, you take a Bitcoin, and the process of exchanging, you pay fees. These fees come to me as the one who provided the pair in the market. That's the auto market making, literally. And that's also liquidity provision, or LP.
Thank you very much for that clarification.
Interesting takes there, Solomon. A question here for you. What cryptos are close to solving interoperability?
That's a very good question. Very, very good question. I think this is the natural frontier from here. There are three ecosystems that I understand probably that I think are working purely towards this. One is Nevos network. The other is Polkadot. And the next is Cosmos. These blockchains are clearly working towards interoperability. Of course, when you lift the whole thing, these are the base layer infrastructure. When you lift the whole thing up, there are a number of infrastructures built on top of these blockchains that allow for interoperability by default. When you take Essentia, for example, Essentia is a layer 2, what we normally call layer 2 infrastructure, building somehow on the other layers that allow them to actually interoperate, but at the base layer, whilst this top layer is actually doing most of the hard lifting or weight lifting.
Thank you very much, Solomon. Tell us more about staking cryptos. That's someone's question.
That's a good question, because I think one thing I didn't explain in detail is what are the types of blockchains. We have permissioned and we have permissionless. And we also have proof of stake and proof of work. The proof of stake and proof of work are simply the governance structure in the consensus algorithm. Now, when you take the proof of stake, it's growing very fast. Most of the third generation blockchains are proof of stake, which means that you actually naturally are a staker in the blockchain, which means you stake there. Now, when you stake, it literally means you buy crypto, you hand it over, either it's a validation process or you actually stake it yourself. In the staking process, you literally commit those cryptocurrencies to the blockchain. And in the process of committing it, you are actually earning something whenever new coins are brought into circulation. That's the simple meaning of staking. Of course, there are layer 2 stakers, the staking environments. When you go to layer 2 ones, they are not necessarily blockchains per se, they are token space. But there too, you can stake. You literally earn interest or some kind of returns or reward for actually leaving your coins there and not selling them.
Okay, well noted. A question here is saying, you said don't leave cryptos in exchanges. What are some digital wallets that you recommend?
I always recommend hardware wallets. Ledger is good. Trezor is also good. Keycard is good. There are a number of hardware wallets that are around. Basic approach like paper. Yeah, you can use paper as a wallet. But of course, all this, you always have to know that self-custody comes with responsibility. So you have to understand that once you're doing self-custody, you have to know how to recover your key if you lose it. If you don't have any backup, then it's dangerous. You should have at least 1 or 2 backups somewhere. Do a puzzle, break the key into 5 or 3 pieces, distribute it across people that you think you can trust to keep it. And then one day, if there's something happens, take them together, puzzle them together, and then you have your cryptos back. You don't lose anything with that.
Oh, okay. Eben, were you about to say something?
Yeah, I just have one final question for Solomon. So he talked about staking lending as like this new frontier of crypto. So I remember back in 2017, we had ICO, that was the craze at the time. And currently we have liquidity pool staking as the craze now. What does he think will be the next phase that crypto is going to see once we are done staking and all that? What's the next generation? What do you think will be the next generation? And this is kind of a guesswork or...
Yes. I try to avoid predicting the future. I can assure you that I think that most of us didn't see something like liquidity provision, decentralized exchanges, and NFTs becoming the next frontier. Most of us did not see this coming.
Yeah.
So what I always say is that the speed and innovation is huge. So it's important to not predict the future, but of course, we try nevertheless. So what I say is that going forward, we will see a lot of innovation on domain internet reconstruction at the bottom, domain names, for example, because now you can own your domain name. I also think that in the next frontier, we will see gatekeepers, a lot of gatekeepers. When I say gatekeeping, I literally mean companies or institutions that come to the front end and provide services on top of the blockchain that does not allow you to even interact with the blockchain at all. Now, if you care about history, the internet started like how cryptos is today. People were able to use the internet directly. Today, most of us are actually dealing with the internet through gatekeepers like Facebook and Twitter and Google and all that. Now, this is very important. You will see more and more institutional gatekeeping happening. And I think that people who are very, cyberpunk, like people who are very crazy about the internet and independence, will get a little bit concerned about this gatekeeping, but it's the natural way. People don't like responsibility. So whenever they can find somebody they can hand over the responsibility and blame them if things go wrong, they will go there.
Yeah. Right.
Okay.
Funny thing is, I have the same thinking as you have, like in the future. So basically, I talk to a lot of people, as many people will be on this call who have that same sentiment that I don't want to know about coins in my wallet system. Handle everything for me. I just want to see my money flow from A to B and all that. So I believe there are people in this space who build systems where people will be using Bitcoins for a practical example is remittance without knowing that they are sending via Bitcoin. People that are building innovation that people can send money from UK to Ghana over the Bitcoin network, but you receive in your mobile money wallet without knowing that it came to a Bitcoin wallet.
Exactly.
So we have innovation going for it. And right now with the AFT agreement, bringing Africa together, I feel like there's a space for someone to build that kind of service in Africa as a country. So you might be here, you might want to explore the technology as to, in the technical aspect as to what can I do with it to also better the everyday life of people. can also expand that way.
Okay. Thank you very much. Before we continue, I'd like to say that the recorded version of this webinar will be available to stream on our YouTube channel, Invest in GH. For those of you who have registered on our websites, we will send you the link by your mail. For those of you in our WhatsApp groups, you will receive the links there after the webinar. However, if you are not in our groups and you also haven't registered on our website, please do well to register. Visit our website, www.investingh.info. Click register. It's a very short form. Enter your name and an email address that we can contact you through, and then you will receive it. But the video is currently streaming. The link is in the chat section here on Zoom. And for those of you on YouTube, you're already there. So just click it and then you can save the link and watch it later, or we'll send it to you in our groups. Thank you very much. Another question for you, Solomon. No, this is for Eben. Does Yellow Card allow trading in cryptos apart from Bitcoin?
Yes, we are currently testing that internally. So we'll release Ethereum and Tether very soon. So people can use Yellow Card to buy Ethereum and you can use it to buy Tether, which is Tether is a currency that is pegged to the United States dollar. So that will be available very soon.
Hello, Prince.
Solomon, sorry, I was on mute. I was asking, are there engineers that work actively on the blockchain?
Of course, all blockchains are designed by engineers, and there's always constant work on the blockchain. Well, this is the thing. The blockchain is a very bare metal infrastructure. You need to understand that when you take the blockchain, it's simply nothing but a bare metal infrastructure in terms of software, but many things can now be built around the blockchain. So if you take the Bitcoin blockchain, for example, now there are a number of other applications that are being built on this bare metal infrastructure. If you take the Ethereum blockchain, it's a deep forest of, I don't know, many things, so much. So the blockchain is bare metal, but a lot is being built on top of that. Once you release mainnet, normally the work is a bit limited, but many more people are now working on things on top of the blockchain most of the time. Somebody is asking whether I can show my email again. I think it should be here. Yeah. So was I clear, Prince?
Yes, yes.
I'm also very active on Twitter, so feel free to actually contact me on Twitter.
Okay, we'll do that. But don't worry, for those of you who don't have his details, we'll mail it to you after the webinar. It'll also be in the WhatsApp groups, so
Right.
Don't worry. You will also get the presentation after the webinar, I think. Okay. Solomon. Okay, another question here. Someone is asking that there is an underlying value to every currency circulating globally. Is there an underlying asset that based on which cryptos are valued? Like you can say
It's
that.
a very good question. I remember in 2016, I said to people in a conference here in Switzerland, I was presenting, and I said to people, if you're over 45 years old, I can sympathize if you don't understand what we are talking about. If you're below 45, I think you should try to understand. So let me answer this in a way. I know how it feels like to come from a place of physical asset. Because normally, whenever our brain wants to understand something, it literally creates references immediately. In fact, we don't know these references are happening because they're happening anyways. So this question is about historicity of asset-based thinking. That's true. What's the value behind cryptos like Bitcoin? I mean, why should a token like Bitcoin cost 58,000 to buy one? Answer, I don't know. But there is a value proposition. The value proposition is so nuanced, it's very hard to see. First, one Bitcoin 10 years ago is still one Bitcoin today. It has not changed. But one Bitcoin 10 years ago was less than $1. Today it's 58,000, or if you take market corrections, perhaps less. But the most important thing you need to understand is that there is security at the core of the network. This security is very expensive because today, how much do we pay bankers to move money around, or accountants to, or auditors to? Now think about that, and this money of intermediation, the value of intermediation is literally on this blockchain. So this is a bit of comparative thinking. But you think of the security, you think of the innovation, because it's bringing strangers together to build something that they don't need to know each other to build together. These are all value propositions, but they are very hard to see because we have taken them for granted in the normal world because we see them every day and somebody's doing the work anyways. So there are a lot of things you can use as value proposition, but it's hard to conceptualize in asset-based thinking.
Great.
Thank you very much for that. Okay, Ben.
Certainly. So I want people to think about, I don't know how familiar people are with auction houses. So say a product is supposed to, I'm holding a bottle of water here. Say I want to auction this bottle of water for a certain price. This is the only bottle of water left in the world and people want it. I'll get someone offering me to buy for 10 cedis. Someone would think that he needs it more, will offer me 20 cedis for the same bottle of water. The bidding will keep on going till the final person decides that, okay, I'll put in a final bid of 2,000 cedis and I buy the water because I have the money to afford that. Because Bitcoins have a finite supply, demand, whenever the demand for it keeps increasing, a lot of people are being pushed into it. So for example, currently we saw Tesla and some other funds pumping money into it. So these people are bringing high demand for the same fixed supply. Then everyone jumps on it. Okay, if Tesla and these people are buying, let me also buy some. So the demand grows up, causing the price to move up. So all this is not backed by anything, it's backed by what's demand and supply. So if I feel like it's worth more, I'll pay more for it. And it pushes the price to go higher. That's how it works.
There's one more thing, programmability. I think that when you take Bitcoin, it's a little bit like savings and it's pure. If you take something like Ethereum, there is an intrinsic value in the programmability itself. For example, I was talking to you about smart contracts. You're able to actually take a smart contract, deliver a smart contract, deploy it to actually do the work of real humans. Now, this work they're doing, you would have paid a human being to do it. So that's a clear value. Besides that, the idea of programmability is yet to be fully conceptualized and understood. Once we understand how programmability brings value, we will see that, okay, it's beyond just Bitcoin, which is just what I call a clear savings ecosystem. When you take it down to the other cryptos today, most of them have more than just savings. They give you programmability and the ability to actually deploy code that does the work, real work of humans at a value.
Okay, all right. Solomon, there's a question here for you. Why are transaction fees so high with Bitcoin as the price increases?
Yes.
And then there's a follow-up. It says, because one can't risk paying for a cup of coffee with Bitcoin, is there any technology that can fix this?
Oh, we already, in 2015, I had a coffee with a friend. He paid the coffee owner with Bitcoin and said to the woman, I paid you in Bitcoin. The woman freaked out. The guy said, don't worry, what I'm paying you with, you will not see in your account, your bank account Bitcoin, you will see Swiss francs, okay? The woman relaxed. The point is that you can actually pay people in Bitcoin. You can pay, there are credit cards around that are completely connected to the blockchain that you spend your money on the go. You can spend Bitcoin like dollars, the proxy, like national currencies. Now, the first question is very important. The reason why Bitcoin fees go higher when there is a big demand is coming from a place, very basic technical issues. For example, in the Bitcoin blockchain, there's something we call the mempool. when you actually send a transaction, when you send a Bitcoin to somebody, that transaction actually is put into this place called a mempool, which is a basket of transactions that are moving around on confirmed transactions. These go into that mempool, they sit there until a miner takes them, and then they mine them. Now, in the high demand environment, what happens is that there's a lot sitting inside that mempool. Many people are buying and selling. So when it happens like this, miners become very, 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 very careful, and they see those who want to get fast ahead. They increase the fees they are willing to pay. So the miners begin to select those who are paying more, because they make more money, because the miner makes more fees from mining. So once they begin to fetch those which are paying more, everybody is forced to pay more in order to get their transactions confirmed. So what happens is that the whole ecosystem becomes more expensive. Now, this is very common with Ethereum and Bitcoin. Of course, that is proof of work. Don't forget that there are proof of stake blockchains. In the proof of stake, it's a bit different. In proof of stake blockchains, you don't really need to compete like this. For example, if you take Algorand has a far more sophisticated cryptographic primitive that allows for speed and the ability to process transactions like this without actually allowing people to select and make more money, miners to make more money from it. So this is the reason.
Okay.
A slight addition
Thank
to
you.
that. So the reason why miners have to select is Bitcoins can provide or can process transactions about just 3 to 7 transactions per second, which is too small to take the volumes that come in. So for example, if you compare it to, say, Visa network that can transact thousands of transactions in a second, then Bitcoin becomes a bit slow in that sense. So that's why it keeps longer, and you have to select the people that are willing to pay higher to get their transactions through the door.
Oh, okay. All right. We are wrapping up on the questions. If there are any hands raised, I can unmute so that you ask your questions directly to the speakers. Okay. Another question here. What are the plans for any government policy that seeks to clamp down on cryptocurrency trading, especially in Ghana?
I'll leave that to Eben.
Yeah, so we've seen that happen in Nigeria. So basically, Nigeria Central Bank decided to issue a statement to the banks not to bank with centralized exchanges like Yellow Card. So basically, Yellow Card cannot operate a bank account with a Nigerian bank. But that didn't stop people from trading in the crypto space, because most of the volumes that are in the crypto space right now is not being traded by companies like Yellow Card, which are called centralized exchanges. They are being traded peer-to-peer between people on WhatsApp platforms. Personally, I'm in WhatsApp platforms that I see people move millions of dollars on a daily basis with each other. So clamping down on exchanges is, I feel like, is the bad way that governments go about it, because I might be biased in this sense, but that's the honest truth. Is the exchanges like Yellow Card or like any of our competitors take what you call KYC from customers. So we rather know who is trading what amount and can give that information to the government and say, okay, if we want to regulate this space, we can tell you what is going on in this and give you a view of what is going on in the market for you to know what is happening and how to come up with policies to regulate it better. Now, if you shut people like us down, everyone will go back to trading on WhatsApp platform, where I can basically send money to anyone with my bank account and not 10 minutes as crypto. I can use mobile money and not 10 minutes as crypto. The person sends me crypto.
Just one addition on that. I think that one of the institution I've done the most training in Ghana is the Economic and Organized Crime Office, EOCO. The reason why actually, well, I was very excited about this experience is that I think governments have a lot of work to do in this space. The reason why I think government will have a lot of work to do is because of the level of scams and criminality. So when government take a draconian rule like what Eben just mentioned, also it's common in China and other states, what you actually end up doing is you drive people underground. You put them in the dark. So they go down there and they are far riskier. They are at a higher probability of being scammed in this dark space. So what I always say is that governments have a lot of work to do to actually clarify the space and allow people to actually come out into the light and do things, genuine, legitimate business. Then you can catch scammers faster. In 2015, I saw something that was going on the internet in Ghana. I sent an email to a top-level government, and I think after this, it didn't take long before I saw a publication on the government, the central bank, the Bank of Ghana, make a statement on cryptocurrencies. I was very happy about this because for me, I think that government have to keep providing as much clarity as possible. This is so crucial. This is extremely crucial.
Yeah. Final point on this is, I think people have the notion that Bitcoin is not transparent. People cannot see what's going on. But the thing is, if you use Bitcoin for certain illegal acts, you can easily be caught because the accounts or the wallet you are using can be traced. Every transaction has a public ledger that everyone can see what is going on. So for example, let's say people are using it for some illegal acts and decide to come sell to a company like Yellow Card. The moment the transaction hits Yellow Card, it hits Yellow Card's wallet that is tied to the identity. So if someone wants to come in, let's say a government official wants to come that these people are traced this thing, you could easily get the identity of the person attached to that wallet that performed that transaction. So if governments decide to shut people like us down, then basically what people are doing is, and for the first place is anyone who is a scammer knows that I can't use a platform that gives my identity tied to my wallet. So I'd rather trade peer-to-peer where you will know who sent what to who, basically. So that's what I want to add to this point.
Eben, Prince.
Yeah, can you hear me?
Yeah.
Okay. Randy has a question. He's asking, are there institutions that offer professional cryptocurrency expertise in mining, trading, or taxation?
I really don't know any, but I think it's these are things you can learn on your own. You will take less than a week to learn all this on your own. Actually, it's not that difficult as it seems.
Okay. All right. We'll take two more questions. The very first one is there a high possibility that lots of people are holding fake Bitcoins?
The chances are high, very high.
Interesting. And then the last one is saying that, which cryptocurrencies do both of you own?
I think Eben will be the right person to answer this question.
So disclaimer, this is not investment advice. I'm not telling you to go and buy what I own. Personally, I've researched them and I'm owning them. Some of them I've been owning since 2017. When a crash came back, I'm still owning them. So basically, first thing is my number one advice. If you are new, just buy Bitcoin. That's the most reliable one. Forget about every currency. Forget about what someone is telling you to go 10x, 20x. Is the next Bitcoin, is the next whatever killer. Buy Bitcoin. If you finish with that and want to explore, look at, I'm not mentioning names, but look at projects that are solving problems that Bitcoin have strong team, have strong community backing them, have shown some kind of proof. They are not just showing you a white paper saying that you are going to build this, but have actual code base running or something that you can attest to that this is a good project. You have to do your own research on that to find out which ones are working and invest in them.
Okay, thank you very much, Eben.
Regarding this question, personally, I will say I don't talk about my holdings. I call them bags. So I think Eben has got it right. There are a lot of things going around saying they will be the next Bitcoin. Let me be very clear. There will never be another Bitcoin. Bitcoin has a problem it has solved, and that is it. that problem is solved, nobody would bring something on this. There will be cryptocurrencies for other purposes, but not for the purpose of Bitcoin, because Bitcoin has solved this problem. That's it. There will never be another Bitcoin. You hear about something killing another. No, that this crypto will be the killer for the other crypto. It's also not true. Once a crypto, because there are two things you need to remember. In this space, there is what we call the first mover advantage, and there's a network effect. First mover advantage simply means when you actually have an ecosystem started, it eats a finite set of population, because we are a finite community as a people, and you cannot have the same thing repeated per se. Example with this is telecom companies. Most of you will not give up your MTN number today to get Vodafone. You most likely will get two numbers, but you will not give up one to get the other. Facebook is another one. You most likely will not leave your Facebook account in order to go and have just Twitter or Instagram, or you most likely will keep both. The front runners, what we call the first movers, normally have an advantage in eating the ecosystem because we are a finite number of people. The network effect is simply because when I have a Facebook, I'm likely to ask you to join Facebook so we can communicate. So the network grows. The same thing with cryptos. The exact same is repeating itself. So what I say is that be very careful when somebody says this is the next Bitcoin. It's most likely not going to be the case.
Okay, thank you very, very much for your response, even though you didn't tell us exactly which cryptocurrencies you are holding.
But I mentioned it. I mentioned Bitcoin. That's the portion of my portfolio. The rest are bets, which can go down. And frankly, I won't advise a newbie to purchase those ones. Yeah.
Okay, we understand you. All right. Before we leave, just a few announcements. This webinar is hosted by Invest in GH. Invest in GH is the leading provider of financial news and education in Ghana. Over the years, our news, magazines, and more recently, our webinars have been delivered to thousands of people like you and beyond, in Ghana and beyond. Also, you can access all our resources on our website, investingh.info. investingh.info. Kindly do well to register there so that we can add you to our subscribers, and then you will be receiving correspondence from us as and when we send them. This webinar will also be made available on our YouTube channel, Invest in GH. So do well to visit the Invest in GH YouTube channel. Watch our previous webinars. We've talked about investments in real estate, stocks, mutual funds. We've discussed how to achieve financial independence. We've already discussed how to buy cryptocurrencies. So you can watch that too, and then watch this one as well to enhance your knowledge on finance and investment. Also, you can join the Invest in GH WhatsApp groups. And then Eben has also posted his WhatsApp group in the chats. You can look through and then join so that you ask him your questions on Yellow Card and then Bitcoin buying on Yellow Card. This webinar was sponsored by Yellow Card. They are a crypto exchange where you can buy and sell and store cryptocurrencies. So visit their website, www.yellowcard.io. Sign up using the referral link that we have provided in the chat section here. We will post the resources, the PDF of the presentation, and the contact details of the speakers to our WhatsApp groups and then to your mails after the webinar. So look out for that. Then we'll also add the WhatsApp links for Eben's group and then the Invest in GH group so that those of you who have not joined can join. And before we leave, I'd like to thank our speakers for joining us today, Solomon and Eben. Do you have any final words for us before you leave?
So I'll just say, you mentioned Yellow Card, what we do. So we've heard a lot about cryptocurrencies, the space, DeFi, and everything. To get started, you need to actually make the step of buying the crypto or buying the Bitcoin or buying any other currency. And most likely you will need Bitcoin as the access point to even buy the others because you don't have access to it directly from exchanges to buy with your fiat. So Yellow Card, what that Yellow Card does is We help you to buy, convert your CDs to Bitcoin. You can buy from our platform. You can decide to store it on our platform, which is usually Yellow Card. We don't even recommend you do that. Already get a cold storage and store it on there. But you can buy from us, send to any wallet you want to send to. You can buy from us, and you can also sell to us anytime. We are ready to buy from you and sell to you. That's what we do.
Okay. I don't know if Solomon dropped off, but when you visit our YouTube channel, do well to like and subscribe, like our videos and subscribe to our channel so that whenever we go live or we stream, you'll be notified. Thank you very much for joining us today. Apologies, we lost Solomon, so he won't be able to give us his final words, but do well to contact him on Twitter. Okay, he's back.
Okay. Please, you're muted, Solomon.
Can you hear me? Yeah, I got
we
it.
can hear you.
I got the interruption of my network. So where are we?
Yeah, final words.
Okay, so thanks everyone. It was great to share my knowledge. Feel free to reach out on Twitter. I am more active on Twitter than by email. So just ask any question. And to be clear, no question is stupid, because I know how people feel about this space. Feel free to ask any question. No question is basic, no question is stupid, no question is dumb. Feel free to ask. I'm open for conversations. Take care.
All right, so I'm posting the Yellow Card link in the chat section so that you can check and then sign up using the link. And then you can watch this video later, so don't worry about that. Do what, like it and then subscribe, like I said. Thank you all for joining us today. We
There's one
appreciate
thing,
your time.
my Twitter handle I showed on the presentation. It's Solomon Sayings, at Solomon Sayings. Yeah. Just in case.
Okay, sure. We'll send that separately. So
okay, cool.
Okay.
All right.
I think most people can watch the first video we did on introduction to cryptocurrency. They can get some insight as well from there.
Mm-hmm.
Okay, that's great. All right. Thank you very much. All right. Have a good evening. Enjoy the rest of your day. We'll see you next time.